Hey guys, so unless you've been living under a rock recently, you will have noticed that Tesla's share price has been absolutely soaring over recent months, and especially so over the past couple of weeks, where a 5-for-1 share split was announced on the 11th of August. So Tesla stock did crash down to $360 per share in March due to the COVID market crash. However, it then bounced back and grew up to $1,375 by the 11th of August, and that was achieving a 280% price growth in roughly a 5-month period. However, since the share split was announced on the 11th of August, the stock has experienced next level parabolic growth, going from $1,375 per share to about $2,210 per share on the 29th of August. And this is a 62% gain in about 2 weeks. So absolutely massive gains there. So a lot of people are very bullish on the future of Tesla, and therefore there is a large amount of hype around the stock, driving prices up. However, some people will argue that the stock is incredibly overvalued right now, based on Tesla's current financial situation. So in this video, I'm going to be looking at why Tesla could be about to crash, and how it could be in a bubble right now. However, I will also be looking at reasons why it could not crash and how it could just keep on going up throughout the rest of the year. So just quickly before we get into it, guys, if you do enjoy this video, be sure to leave a like and subscribe, as it really does help me out. And yeah, let's get into it. So why a crash could be coming up. So Tesla shares are currently overpriced in every sense of the word right now, and I obviously do understand that a large amount of the share price growth is due to the future potential of the company. However, people are buying into the future performances of a company decades before it even gets there. And there is so much that can change or go wrong with Tesla before it starts to perform financially where it needs to be to justify a share price of over $2,000. And the PE ratio at the moment is ridiculously high at over 1,100, which is just astronomical. There is also a lot of new and inexperienced investors holding positions in Tesla right now. So Tesla is a stock that has built up a lot of hype recently, and novice investors who have never set up a stock trading account before have signed up just so that they can purchase shares of Tesla. So inexperienced traders traditionally tend to panic more and sell their stocks when the share price drops significantly. So if Tesla was to experience a sell-off at some point in the coming months, a large amount of the novice investors could also panic and jump on the bandwagon of selling, and this will obviously it'll be a catalyst for the share price going down. And yeah, this ripple effect could cause significant share price decline if there is a sell-off that happens. So right now we are seeing a potential repeat of the early 2000s dot-com bubble, which saw many tech stocks crash due to them being traded at similarly high price points with very high PE ratios due to overspeculation. So it is likely that Tesla is being overspeculated and may not deliver on its future expectations. Despite a large pullback for many companies in the dot-com bubble, a lot of them did bounce back later on and are now some of the biggest companies in the world, such as Amazon. So Tesla may not be the best choice for the short term. However, that doesn't mean that you can't buy back when the share price has lowered. So another pretty big thing is that Tesla does not own any patents related to electric vehicle technology and has therefore got quite a shallow moat. So Tesla has a lot of competitors, many of which are far more established companies than they already are, who are going to be able to offer rival electric vehicles at some point. And with no patents in place, large companies competing in the market, such as Audi or Mercedes or BMW, can essentially replicate Tesla's design and software when they become capable of doing so. Also, Tesla has never been operationally profitable since they began 17 years ago. So despite recent announcements that they achieved $104 million of profit in quarter 2, that does include $428 million of profit in emission credit sales. Now, this is a big deal because this is a revenue stream that will drastically be reduced later this year, and Tesla openly admits that this will completely disappear at some point in 2021, when other manufacturers have enough of their own electric vehicles for Tesla not to be able to sell the credits. And another thing is that insider trading transactions from the last few months do show nothing but sell-offs from people inside of Tesla. So several large shareholders working at Tesla have been selling off significant quantities of shares recently. So it is important not to read too much into this, as insider trading does happen all the time in many companies, and it's not that uncommon to see insiders selling off their shares. However, the fact that it is all selling and not buying does suggest to me that lots of Tesla directors and employees do believe that the share price is overvalued right now, and have chosen to sell and chosen to convert their shares into cash to take this opportunity to sort of cash in. And that obviously doesn't mean that they cannot buy back in later on, which I'm sure many of them might do. But it does suggest to me that right now they think the price is overvalued and could potentially be in a bubble. So in saying all of that, it's also important to look at the reasons why it could keep on going up as time goes on without a market crash. So Tesla's Q2 earnings report was positive, and on the 22nd of July they did announce their fourth consecutive quarter of profit, which means that they have satisfied the requirement to join in the exclusive S&P 500. So if they are successful in joining the S&P 500, investors predict that the share price will go up due to an increase in demand for the shares, as all of the ETFs that track the S&P 500 will need to buy up shares to keep up with the tracker. So they also have enormous future potential to be the market leader in the automotive industry. So the car market is shifting to environmentally friendly vehicles that can operate sustainably, and Tesla is in pole position right now with their electric cars to sort of be the market leader in this industry. Another exciting point is that Tesla is expected to have full self-driving ready by the end of 2020. And Elon Musk actually claimed that it's so close to being finished that he has actually started using it in his own Tesla already. And when Tesla, or if Tesla do achieve this, they will be the first car company to offer a fully autonomous vehicle, and this will give all Tesla owners an option to upgrade through a free over-the-air update. This will obviously make Tesla cars even more desirable, and more people probably want to buy a Tesla at that point. It's also important to mention that their secret Dojo supercomputer project will allow Tesla to train their autonomous fleet of cars and gather more data to improve their AI systems. And this is something that they have a massive head start over other companies. So Tesla is already stacking up the driver miles that they've recorded, and the more miles that they get under their belt into their systems and into their database, the more accurate and the more efficient their AI system can be. And that will obviously improve the performance of their self-driving cars. So it's not just cars that Tesla has exciting future prospects for. They also have other ventures outside of their cars. So Tesla Energy, which is their solar energy department, now offers the cheapest option in the US for solar energy at $1.49 per watt. So Elon Musk has said himself that Tesla Energy could be bigger than Tesla Automotive in the future. And it gives them a massive opportunity to be a market leader in a relatively untapped market. So Tesla Insurance also has big potential, using AI in each car to create a unique driver profile to give their drivers custom quotes to suit their driving needs and habits. And insurance is an industry that many believe is due some disruption, with companies such as the newly IPO'd Lemonade attempting to disrupt the market to offer customers fairer and quicker insurance quotes on their digital app. So Tesla could also join the movement to disrupt this industry and shake up the current market with their expertise in AI. So we've also only just approached the share split date right now, and in the short run, the immediate impact of the 5-for-1 share split will fuel continuous share price growth, as Tesla shares will become more accessible across the entire world, not just the countries that have access to stockbrokers which support fractional shares. So this increased demand is therefore likely to drive the price up further in the short run. It's also important to mention that Tesla and Elon Musk both have large cult-like fan bases that is growing more and more by the day. So in order to dominate an industry, it is important to have a likable brand which has good PR and a mission that most of the general public can support. So this is something that Tesla certainly does have, and will help to propel them forward to potential automotive market dominance. And as I said, Elon Musk is a very likable character, a lot of people like to get behind him, and that will certainly help Tesla out in terms of sort of public relations. So what should you do? So I'm not a financial advisor, so all of this is completely my own opinion and for entertainment purposes only. You should always do your own research. However, personally, I do believe that the correction is due and will happen within the next month or so. I think that the price is currently just way too high, and after the share split, we could see a significant pullback in the price. However, this might be completely wrong and might not be the case at all, and the price could, in fact, just continue to go up for the rest of 2020. So even if there is a Tesla stock crash, I believe that Tesla is definitely a company to hold for the long run, and one that I'm very bullish on for the future. Personally, I am not going to be buying or selling any Tesla right now. However, if there is a significant price drop to around $1,400 or $1,500 or lower, then I will definitely be looking to pick up some more Tesla for a future long-term hold. At the end of the day, you should only be keeping a position that you're sort of comfortable to lose the majority of. And this is because Tesla is a very volatile stock, more volatile than many out there. And it could be a massive bubble right now, meaning that there's a chance you could lose a large amount of your investment. So definitely don't put too much money into Tesla. Be careful with what you do. So that is all for today, guys. Tesla is certainly a very exciting company and one that is always sort of in my interest to look at. So if you guys are interested in more videos on Tesla, I will definitely be covering more in the future. So be sure to subscribe if you want to see more content like this. Also be sure to leave a like if you did enjoy it. That really does help me out a lot. And also be sure to comment. Let me know if you already own Tesla shares or if you're looking to buy more. I'd be really interested to know what you're doing in the market. And apart from that, guys, thanks a lot for watching.